this yesterday. Okay, statement of cash flow. This gets kind of tricky. We're gonna walk through this at a basic level because again, I think this is important for finance managers because we're always talking about cash is king. Okay, well here's our cash flow information right here. All right, I think this is an underutilized statement. Okay, so notice our three big sections: operating, investing, and financing activities. What goes in? Well, let me put this another way. When you first start with your statement of cash flow, what do you always start with? What's the first line item? Net income. And then what do you do next? Okay, what we want to say is that we add back depreciation. Why? Because it's a non-cash item, but be reminded, senior finance majors, that depreciation is not the only non-cash item. It's the most common example. I mean, I don't think I've ever seen a set of books that didn't have depreciation on it, but it's not the only example. In fact, we've already talked about another example with McDonald's, and that is amortization. Amortization is also a non-cash item that we would add back. We also might add back bad debt expense, depending on how it's accounted for. Okay, and that's what we have here. So notice they have depreciation and amortization being added back into net income. Okay, so once we have that, basically what goes under the operating section. And don't say operating activities, I know that. What are we looking at here? Yeah, basically what we're looking at here are the changes in current assets and current liabilities. So notice that's what you have right here. Accounts receivable, inventory, accounts payable, income tax, other accrued liabilities. So those are basically, under the operating activity, basically your current assets and your current liabilities. But more specifically, any operating. Okay. Investing is basically going to consist of which are more broader than that. Long-term assets. So what's going to go into your investing are changes in long-term assets. Okay. And then under financing would be changes in long-term debt and equity. Okay, so that's going to be down here, but notice they have, for example, net short-term borrowings down here in finance. That's actually a current asset, but it's not an operating. It's not an operating activity. Which is consistent, that's what we just talked about, the difference between accounts receivable and notes receivable, for example. That's what we just finished talking about that. Okay, so like we said yesterday, doing all of that gets you down to the change in cash, and like I told you yesterday, the point of this is to reconcile, this is what your cash balance was last year to the penny, this is what the cash balance is this year to the penny. And that's the point of the statement. Okay. So, I've always felt, like I say, this is actually on my research to-do list. It has been for longer than I care to admit, and I haven't gotten around to yet. But I think particularly this cash provided by operations number, I think is an underutilized number. That'd be an interesting investor topic one day.
Which number are you?
The cash provided by operations. Oh. Cash provided by operations. Okay. All right, so that's kind of the big picture there. Questions about any of that? Questions? Okay. This is one of my spreadsheets that I have posted on Canvas. This is an example of what you can expect on the exam. Okay, so springboarding off of what we just did, okay, what you have here are accounts listed in, actually they're listed in alphabetical order, but basically scrambled order. Okay? And then you're given a set of instructions. I've kind of got these broken down on several sheets, but the basic instructions are prepare your income statement, balance sheet, and statement of cash flows. okay? I have a few numbers here that you need to fill in with the information provided down here. So this would be an example of a problem on the exam where you might spend 10 or 15 minutes doing this, and then when you're done, you hop over to the quiz and you answer 4, 5, 6 questions on this, such as what are current assets, what are long-term liabilities, what is operating income, so forth and so on. If sales change to whatever, what is net income in that case, okay, so forth and so on. All right, so that's what you can expect, and the point of this, in addition to making sure you have a grip on basic financial statements and what they mean, the point is to make sure that you understand the relationships. Okay, like we were just talking about with inventory. Well, if we change our accounting method from FIFO to LIFO, or vice versa, what effect do we expect that to have on earnings? What effect do we expect that to have on our balance sheet? Okay, that's what we're getting at here. Okay? Which obviously is important for finance people to understand. So let's go ahead and go through this. You guys are seniors. You know how to take exams. So I don't have to tell you that, but I'm going to show you a few things that I'll give you a few suggestions. Let me put it like that. The first one on here is to calculate or prepare the balance sheet and income statement. So what I'm going to do is just kind of, for the moment, put assets up here, liabilities and equity here, and then income statement down here. What I would recommend you do on a problem like this is to cut and paste everything over. That way you don't double count yourself. Okay? So accounts payable, for example. Where does that go on the financials? Okay, liability, more specifically, is going to be, is that Dean? I hope not. Okay, accumulated amortization. By the way, what type of account is accumulated amortization? What's that called? No fair accounting majors. Yeah, in this case, actually a contra asset account. It's called being a contra account. Where's accumulated amortization go? Accumulated amortization. Okay? That'd be an asset. Accumulated depreciation. Asset. Administrative expense. Okay, income statement. I relatively recently had an unpleasant experience where I asked a similar question to graduate students, and they couldn't tell me what part of the financial statements administrative expenses go on. That's not good. I don't want to be too specific, but for a financially oriented class, that's not good. That's why I'm doing this with you guys. Amortization expense. Income statement. Additional paid-in capital. Not retained earnings, but that would be under equity. Is everybody with me? Okay. Bad debt expense. Where does cash go? I hope that's funny, because if you don't recall where cash goes on the financial statements, I'm not saying this to, you need to know. If you don't know where cash goes on the financial statements, in my opinion, you really have no prayer of effectively analyzing financial statements. So again, that's the point of this. I mean, I'm saying it as a jest, but I'm also being serious. I mean, you need to know. Cost of goods sold. Yep, we just talked about that. So what I'm doing for exam suggestions, all I'm doing is taking them over and just putting them in like a basic area where I would put them, and then I'll clean it up later. Okay, so that's all I'm doing right now. Common stock, equity, before or after additional paid capital? Before. Depreciation expense, income statement, interest expense, income statement, inventory, assets, long-term debt. Yeah, I mean, that's an insulting question. Net accounts receivable. Be careful of the word, whenever you see the word net on financial statements, pay attention. Net accounts receivable. What is that net of? Exactly. Okay, so that's accounts receivable net of our estimate for bad debt expenses. Okay. So, said another way, as of this year here, we're not owed, probably, not owed only $33,767. Probably owed more than that. Okay. How much more? Have to go to the notes. Have to go to the notes and figure it out. All right. So where's this go? Assets. Patents. This is one of our examples of intangibles. So that would be an other asset account. Okay. Property, plant, and equipment. You guys know where that goes. I hope. Retained earnings. We've talked about that. That goes equity. Short-term notes payable. Our debt. Sales, of course, go on the income statement, and taxes are income statement. Okay. So the first step, again, my suggestion, you guys do what you want. If you want to copy and paste or recreate, knock yourself out. But number one, I think you're potentially making things less efficient than they could be. And number two, you really run the risk of either not accounting for something or double accounting for something. That was the way I'm going to get that graduate experience. Sometimes people who should know this don't know this. And this is something that you should know, which is why we're doing. Okay? So this would be the first step, and then, depending on the exam questions, I'd probably clean it up. Actually, not depending on that, because what you would want to do is balance everything. But once I have it at this stage, what I would do, which is what I have over here to the right, is I would clean it up. One of your best practices from Chapter 1 is to put together organized financial statements. Okay, so particularly on a question like this where I might say, well, hey, if one of these accounts changes to such and such amount, how does that affect everything? Okay, the more organized you are, the better. I don't think, you don't really have to take the time to put it in color unless you want to, if that will help you. I mean, it only takes 2 seconds to do that. But this would be the, first step here. Questions so far? And here's our income statement in our template. Questions so far? Okay. Now, we need to go in, and by the way, we know that we're correct because when we did all of this from the prior year, 2007, our balance sheet actually balances. Okay. Now, we may not be correct with respect to current assets and property, plant, and equipment. We may have to get misclassified, but we're pretty sure that we're correct and we have everything in the generally correct place. Okay, and that's where putting together an organized spreadsheet pays dividends. I've heard it year after year in this course. They'll get on the exam and they'll start doing this, and afterwards they'll be coming to me and they'll say, yeah, I should have been done 15 minutes earlier, but when I did that balance sheet, it didn't balance, and I had to go figure out what my mistake was. okay? That's where the time starts being consumed. Okay? All right, so now we want to start filling in numbers, okay? Accumulated depreciation. So I give you all of that information down here. All right, and again, I'm not going to turn this into an accounting class, you know, because we could get real crazy with this stuff. Well, you sold this, you bought that, and you know, you got hard year, mid, you know, I mean, we could get crazy. We could get crazy with this stuff. I'm not going to do that to you guys on the exam. Okay, so this is just, you know, assuming you bought it at the beginning of the year and that kind of stuff. Again, this is what I really want you guys to make sure you have a good solid grip on as graduating finance seniors is the relationships between the statements. That's what I'm focusing on, not all the little nitpicky accounting things that we could get into. Okay? So what I've got here, property, plant, equipment, useful life, 30 years, straight line. Okay. So over here with our property, plant, equipment, what do we need to do? Notice that it went up from 225 to 275, and I'll be more specific with you because some of the instructions in this example are a tad bit vague. I'll be more specific with you on the exam, but in case you're not sure, do what we're doing here and in the homework. Okay, so I'm not going to deviate wildly from that. Okay. So what do we need to do with our depreciation here? Yeah. Okay, so we have 275,000, straight line over 30 years, so that means our depreciation expense for this year is going to be the 275 divided by 30. You know, yeah.
It's 250,000, you probably plan to put the year before.
Correct. Which means we bought 50,000 more. And again, this is where we can get into, well, what time of the year did you buy it? Was any of the 250 retired? We can start getting crazy with all that stuff. I'm not going to do that to you guys. Okay. So, like I say, this is about the relationships between the statements, not all of the little things that we can get into. Okay. So we 9167, and really, if I wanted to be consistent with what I've been telling you, we want to use formulas here. So there's your 275 divided by the 30 years right there. And that's an example of where I can say, well, what if you were depreciating under 25 years instead or something like that? Or what if your property, plant, and equipment was was up to 300 or something like that? Okay, so again, we want to use formulas whenever possible. Okay. All right, so we'll have the depreciation expense here. What do we do up here? Yeah. Yeah, and I have this posted on campus. All right, what do we do with depreciation here?
Hit that 90 and then drag it up.
No, well, no, you're partially right. I thought you were going in the right direction.
Because you can't drag it over. I saw there was a formula where the 90,000 is in front of you.
Well, yeah, that's true, but that's an Excel answer to a finance question. Yeah, our depreciation expense this year is 9167. Our accumulated depreciation going into the year was 90. Therefore, our accumulated depreciation is 99,167. And this illustrates the point of this whole exercise. Okay? To do that, you need to know that, hey, accumulated depreciation is accumulated as of the beginning of the asset, as of when you first purchased the asset. So every year it increases before we start talking about sales and all that kind of stuff. Okay? So that kind of illustrates the whole purpose of this. Okay. So far so good? Other questions? I told you yesterday I love questions. It helps me gauge where we're at.
Yeah, I missed it. You put a formula in that cell?
Formula in what cell? Yes.
Oh, I see it up in the.
Yeah. Because that way, and this is another example of where, you know, if I change the depreciation method on you,
then if you didn't use formulas, it would be a big headache. Okay. Other questions?
Yeah. Depreciation expense, the formula we're talking about, you just have to get it to, you don't have to break it up, right? Like, I don't have to say the 30 years, the 225,000 divided by 30, and then the 50,000 divided by 30 years.
Well, it would work out to the
It's
same
the
number.
same number, but
Yeah.
you don't have to break it up.
But the easy answer is no. No, that, like I said, and that's what I say, I'm not gonna get into a big accounting class with you on this. What I want you to be reminded of are the relationships. Okay. Other questions? Okay, while we're down here, what do we do with amortization? Yeah, that'll be our patent, and notice that we have patents of 50,000, and on this one, you had accumulated amortization last year of 0, telling you what? Financial statement analysis, what does this tell you about the patent? You had a patent on the books last year of 50,000, accumulated amortization of 0. Well, you put it, well, no, if it were amortized all the way, your accumulated amortization would be 50,000. So what this is telling you is you want it right at the end of the year. Right at the end of the year. So here we're going to do the same thing that we did with depreciation. Okay, so we have 50,000 in patent, and I think we're doing this over 5 years. Yeah, 5, which gives us 10,000 in amortization expense this year. Same conversation with accumulated amortization. Yeah, be reminded, I have this posted, so if you go over to the right, the answer's right there. Finally. Oh, because I didn't pick the formula.
Oh, yeah.
Out tricking myself. Fair enough. Okay. More important than the formula is understanding the calculation. Okay, it's your patents divided by your useful life. Okay, other questions? Other questions? Okay, the only thing we have remaining on the balance sheet is retained earnings. What do we do here? And this is, in my opinion, a biggie. This is one of those things we take for granted. Okay? How do we get from beginning retained earnings to ending retained earnings? Accounting majors take forever. This, I feel that. I know you guys are all, because you guys have been living this for 2 years. And we finance majors have been doing other things. That's why I keep saying that. Retained earnings. How do we go from 4236 to whatever it is this year?
You take last year's retained earnings,
Beginning retained earnings
add net income,
plus net income, or minus net loss if we have it, but add net income.
and then minus dividends.
Very good. Dividends, which gives you your ending retained earnings. Dividend policy. Dividends are paid out of retained earnings. If you don't have retained earnings, you can't pay dividends. Okay. Exam issue. Do I have any dividend information on here? No, so don't make up information. Okay. There could be an exception to that, but. So with retained earnings, last year's retained earnings plus net income. We don't have dividends. Gives us this year's retained earnings. Our balance sheet balances. We say a quick word of thanks know because I was using, what was my mistake, anybody catch it? I had a friend of mine who used to give extra credit points every time a class caught one of his mistakes, and I don't have the courage to do that. Anybody catch what I did?
Because you didn't put in, you used earnings before interest and taxes, right?
No, I used last year's net income. As opposed to this year's net income, and we're not done yet because we have interest and taxes to go. Okay, so we actually haven't gotten down to net income. So with interest, saying interest on short-term debt of 2%, interest on long-term debt of 4%. So, let's see, our short-term debt is 43,000 times our 2%. This is an example of where I'm going to go ahead and hit enter, so I know I got half of it in there correctly. Plus, or actually I want to subtract long-term debt times our 4%, which gives us, just to make sure, I'm going to throw in parentheses just to make sure I don't have any order of operations problems. I think I did, but just want to make sure. Sorry.
Can you make it a little bigger?
I can sure try.
Thank you.
That work?
Yep.
And then our taxes, and we will continue doing the tax simplification that you guys have been doing for the last 2 years. Just be advised that taxes really don't work like this. Okay, in finance, the tax simplification we do for calculating our taxes is simply to do what? I'm telling you, we have a flat 34% here. So what do we do? Yeah. 34% times our earnings before taxes, right? That's what we'll do, but be advised, you don't hear anything else I said this morning, you hear this. Taxes don't really work that way. This is just this is not even an estimate, it's just a simplification. And that's important because we start doing this stuff, and then you get on a real world set of financials like McDonald's, and you think it's the same calculation, it's not the same calculation. Okay? I requested a stool here. All right, so we got all that, excuse me, balance sheet balances, so we look good to go. And this is where now on the exam I might go in, say, hey, you know, what are our current assets, what are our total liabilities and equities, what is operating income. If sales change to 400,000, what effect will that have on retained earnings? What will we do retained earnings? So forth. Okay. All right, questions?
Yeah, so if you just type in 400,000 there, it'll automatically change.
Yeah, I mean, I'm just giving an example. On this particular one, I hope so. What I mean, you'd also have to change your cash to get your balance sheet balanced, but I'm just giving you an example of.
Cost of goods sold will change too, right?
Yeah, probably so.
Oh, right, yeah.
Yeah. Again, if I don't start making up information. So if I just on the exam, if I just simply said, hey, what if sales were 400,000 instead? You don't have to start getting into the assumption. Well, you know, variable costs would be this, and start doing all that kind of stuff. Really, what I'm testing is whether or not you use formulas in all of this. That's really what I'm doing. Okay. So again, I'm not going to get into it. Other questions? Other questions? Okay, we don't have time to start the next one, so we'll stop at this point. We'll, tomorrow.